Luckily for us, being extremely bad at trading is just as impressive as being extremely good, because both sides are achieving non-random results. Rather than reversing yourself, here's what I think is going on and how to fix it. If your account performance is a consistent downtrend, then the way you think about price action / market movement and what that means for what will happen next must be fundamentally flawed. This is true because if the way you were perceiving information and then using that to make decisions wasn't flawed / ineffective in regards to accomplishing the goal of profitability, then you should at least be around break even before commissions. If you think about it, it's quite impressive that we are capable of underperforming a computer doing truly random trades. It's sort of like an edge on its own. Except, what's the opposite of edge? Unconstipated? Bottom? Poop. Now that we know our thinking is flawed regardless of our individual approaches, part of the solution will obviously stem from changing our thinking to some degree. This includes, but is not limited to, your thinking about price action, candles, indicators, the tools you're using, and so on and so forth. On the screen are undeniable truths, and now we are about to get real spicy. My first idea is that we are trying to rationalize the unrationalizable, which may or may not be a real word. Examples of trying to use traditional methods of thinking / rationalizations to take trades include saying things like, it can't keep going up, it has to turn around here, no way it bounces off that line again, and yeah. I'm referring to trades that are taken based on our false beliefs that the market will do something that makes sense to us. I'm fairly confident in believing that most consistently losing, not all, traders are doing this to some degree. This typical way of thinking has been created based on what our brain expects from reality, and our brain is a system that has been developing since the day we were born, collecting information, trying to figure out what will happen next, learning to trust certain behaviors, and I don't know, probably some other stuff. I'm not a paleontologist. It creates patterns and logical sequences that it uses to predict events and to free up cognitive space, which is a problem in trading because the market is not logical in the traditional sense. Make sense? Sense. The first idea of mine is that consistent poor performance is partially from trying to rationalize price action using our brain's traditional ways of thinking. This also means that we can eventually learn to change the way we think about price action, and whether or not we do that over time is probably one of the separating factors between those who make it and those who do not. We cannot deploy traditional rationalizations and ways of thinking to the market because it is not a rational being and is not governed by the fundamental laws of reality on which we have learned to depend. I hope that anyone who unironically talks like that goes through an existential crisis, realizes that nobody will know who they are in 40 years and their life ultimately means nothing in the grand scheme of the cosmos, and then start talking and writing like a normal person instead of trying to look smart. Anyways, I'm just saying that the market doesn't follow the same rules and logic that we are used to in everyday life, whether that be in social interactions, the laws of nature, physics, math, the universe, blah blah blah. What I mean by that is think about this. Just because you don't think about gravity all the time, that doesn't mean it's not a massively fundamental and core component of our lives. Everything we do is governed by it. Sports, physics, airplanes, which no way those are real. That is way too big to just be flying in the air. Everything that goes up must come down.
What about helium balloons?
Shut the fuck up. How dare you try and have a fun little, ooh, I'm clever moment. But yeah, think about that. We expect things that go up to come down. Really tall things are rare to us. Really small things are rare to us. And since we have no idea how much stuff actually impacts how we operate reality and what we expect from it, maybe even huge mountains and really deep oceans have influenced a subconscious and mathematical sense of mean reversion in our brains. Meaning anytime we see something extreme, it's rare. And to us, highs and lows in trading are extreme. And so we reverse it instead of following it. And now we've lost all our money. I don't know anything, okay? I'm just saying stuff. Started as an analogy and now we're too deep to get out, so we're gonna keep going. Anyways, this is such a basic example of what I'm referring to, but think about the tallest mountains. They go up really high and eventually they come back down. They don't keep going up. Nothing just keeps going up. We expect things to come down. And the higher up they go, the more convinced we become that they're about to come down. Because most of the time in life that works. We don't go, oh, I was wrong. We go, okay, this is crazy. It's definitely coming down now. The same applies to the deepest trenches, caves, the IQ of never mind. Just really low stuff. It's rare and they all come back up or something. I don't know. They return to the middle. Our brains can trust that things shot into the air will come back down rather than continuing up. And they can also trust that way up and way down are outliers because most of the stuff that impacts our life personally is right in the middle. Like literally just barely above the surface that we're currently on and pretty much just a little bit directly above our heads. Anything beyond that, we have to really look down or up at. I don't know what's going on in the ground below me, and I certainly have no idea what the birds are doing beyond that one that pooped on my head in Florida. Everything that happens in our life is in this tiny little window. And so stuff that happens way outside of it, we're like, whoa, what's going on over there? That's gonna come back to the middle or something. I don't know. Maybe not. Nobody knows how much of an influence the way we are used to everything in the world has an influence on trading. But everything we are used to in life certainly behaves differently than the market. Things in life make sense. The market does not. They work so oppositely to what we're trying to achieve that we manage to get non-random results of consistent unprofitability. Isn't that kind of crazy to think about? Here's another one. Everything ends. One of the only things we can reliably depend on is the end. Everything stops eventually. Plants, animals, kingdoms, rulers, government, life, friendships, relationships, family, songs, movies, me, you. Just compare something as simple as that to how we think about the markets. We could be here for hours just going over the analogies of how fundamentally different everything we experience in life is to trading. It seems like almost all the fundamental truths to the way we perceive the world are completely thrown out the window in trading. How many people fail miserably because of trying to call the tops and bottoms, aka the end of the current movement? The longer something lives, the rarer it becomes. Not in trading though, it really can just keep doing exactly what you thought wouldn't make sense. That was a loud bike. Anyways, I wrote almost all of that at about 95 words per minute, eyes glazed over, in a state of ADHD flow. So I hope you just take away the lesson that our brains think in ways that help us navigate life. And we expect things to happen based on what we're used to. And maybe we are able to consistently lose money in trading because of how fundamentally different the market is from everything we are used to. Oh my god. Sometimes I wonder where I would be in life if I could truly harness this power of mine, rather than this version of existence where I find myself in the kitchen having no idea why I'm there. We have to have faith and trust that through time and work, we will be able to metaphorically rewire our brain to gain a new perspective on what's most likely to happen next. That starts with understanding that the market is not a simple logic puzzle where the tools we've developed through our life experiences will be able to just easily solve it. It is the culmination of thousands of participants with varying degrees of influence, all taking trades for their own reasons. The process of getting better at correctly interpreting information in the market might happen naturally on its own to some people, but hopefully me saying these ideas can kickstart that process for you. This is why Tom Hugard talks about how one of the fundamental issues of traders is from thinking of the markets as if they followed the rules of supermarkets/grocery stores. Food being lower priced is a good deal. Food being higher priced is expensive. We take that same system of thinking and incorrectly apply it to the markets. Except this market doesn't work in terms of our traditional concepts of value. Cheap doesn't necessarily mean a good buy. There's a good chance it will keep going down. Expensive doesn't necessarily mean we should short. There's a good chance it'll keep going up. Common denominators. Sorry, didn't mean to give you math class flashbacks, which is really difficult to say. Prime numbers. This depends on your strategy, but you should be able to find patterns in your bad trades. And when I say patterns, I'm not talking polygons. Well, maybe for some of you, that is a pattern. I just mean certain thought processes, behaviors, and price action that you do poorly in. I don't know, could be anything. Maybe you're awful during consolidation and are great at trends, or maybe the opposite. We all trade so differently, so it doesn't make sense for me to get into more specifics or we'd be here forever. And this video is already long because of the whole thing about mountains and trenches making it hard for us to truly understand that the market can just keep going up or down even after new high or low or whatever. I don't know what that analogy was. The culmination of your life experiences has partially determined the ways in which your brain operates reality, and this applies to the way you interpret price action and use it to take trades. We hardly know anything about the brain if you really think about it. So for all we know, you might keep going long in a stupid spot because it subconsciously reminds you of a carrot you ate in 4th grade. Or more realistically, maybe you're trading in a way that tries to catch rare moments of big spikes or something, instead of expecting what's happening to continue happening in the way that it has been happening. That sentence is, one of my personal problems was when I realized I was only going for trades that would make me feel good if they worked, rather than going for high probability moves that happened most of the time. Gambling is fun, but it's not good for consistent profitability. So trying to call the tops and bottoms of everything rather than following what's happening is stupid for most people unless you've truly developed an edge based off of that. Anyways, the only person who can figure out the common denominators of your bad trades is you. We can't just decide to become insanely good at trading, but we can avoid taking high probability losses, and we can find patterns in our stupidity, then create rules and reminders to mitigate those issues. It's not going to instantly fix everything, but it should help some of you. Also, one time I saw someone say to try and intentionally lose trades, and that is a very cool exercise. If you end up doing the best trading you've ever done, then it has some pretty crazy and also hilarious implications. Just try it out on a sim account and see how it goes. Might change your life. I don't know. Maybe. If you want to support the work I do and would like to trade with a prop firm to not risk your own money or to alleviate almost all the psychological pressure, which is why I do it, then consider using my code and link in the description to get 20% off a trade day evaluation. I personally trade through them because I'm too attached to my own money. And you can watch that on my live trading channel also in the description. Thank you so much to my patrons for your continued support.